Hello investors, welcome back to the channel. Today we're going to be going over my Robinhood portfolio, and we're going to be showing you guys all the stocks that I own in my portfolio and how much profit I've been making so far in the past probably like 6 months. So we'll see where we're at. Before we show you the profits or losses for the 6 months, we're going to actually go over the portfolio first and show you things and just talk about a few things. So if you guys are interested in this, go ahead and smash that like button for me. Press that subscribe button. Leave a comment below, what you guys think about the portfolio. What is the best stock in your portfolio? And yeah, let's get into it. So, first stock in the portfolio is going to be Microsoft. So, big things are going on with Microsoft. Basically, I'm going to show you guys my portfolio, and then we're going to go over some news and earnings and things like that. We're going to just talk more into detail. So the first stock is going to be Microsoft. Microsoft is currently trading at about $145 almost. Friday after hours, the stock went up about 3%. Big news happened, which we'll talk about in a little bit. So for the past week, it had earnings. Earnings happened last week, as we can tell by scrolling down right here. Earnings, we beat earnings. The expected was $1.24. The actual was $1.38. So that's a great quarter again for Microsoft. For the 1 month, Microsoft's up about 3%. On the 3 month, it's about 2.5%. 1 year, about 37%. And then the 5 year, 217%. So we own 13 shares of Microsoft at an average of $126.67. The equity value of that is about $1,884. And our total return is $238 profit so far. Now that is pretty good. I mean, that's a 14.4% return already. Microsoft, I believe in this one. I know this is going to be a great stock to hold for a long run, and we'll tell you guys even more about this later on in the video. So next up in our portfolio is going to be Disney. Disney, I love Disney. I was really hyped about Disney, and I was hyping it up, but it's not looking too hot right now. If you look in the past week, we're down about 0.3%. In the past month, we're only up 0.6%. The 3 months, it's down 10%. And then in the past year, it's up about 16%. In the past 5 years, it's up about 48%. But if we look at the 1 year chart, I believe I bought somewhere around here, and we were up about, it was at 145, maybe a little higher, 146. And then, things just started going downhill. But good news is we have Disney Plus coming out in November. We have earnings coming up soon. So this could, turn around. I'm not going to worry about it. We have 20 shares of Disney at an average cost of $131.57. The equity value of that is $2,619. And our total return is actually negative right now. We're negative $12. Now, if you look, so 131 is our average cost, and it was at 146. So let's just say $15 profit. So 15 times 20, we were up $300 on this position at one point. So that's the thing about holding stocks. If you're a long-term investor, it doesn't matter to you. But there's people that hold, short-term. Now, let's say I would have sold somewhere around this area. I could have, locked in my $300 profit, but I held, and now it's like down here. Now, it could go down, it could go up. You never know what's going to happen. So we're just going to see what happens in the future. As we can tell, earnings are coming up soon. They're going to be on November 7th after hours. So that's in about 2 weeks from now. So we'll see what happens. Next up, we have AMD. AMD was up 3% on Friday and then 0.3% after hours. In the past week, AMD is doing great, about 4%. In the past month, AMD is doing very good, about 12.5%. And then in the past 3 months, it's actually negative 4%. In the past year, we're up about 77.5%, and in the past 5 years, AMD is up about 1,124%, which is crazy if you think about it. That's a huge percentage. I don't know what's going on this year, but hopefully we can get some of those gains. We have 10 shares at an average cost of $28.47. Our equity value is $328, so we don't have too much, invested into AMD. It was just one of the ones I wanted to add. Our total return is very good, actually better than Disney already, $43.52. And I only invested $328, so as you can see, I'm up about 15% on this position. I think that's actually amazing for this stock. It's almost at all-time high. And we have earnings coming up this week on October 29th. So I'm hoping that the stock can get a little boost after earnings. We'll see. Next up, we have McDonald's. McDonald's has been not doing good for me. I'll show you guys their earnings as well later on in the video probably. We're down about 1% on Friday, and then for the 1 week, we're down about 7%. We had earnings right here, and let's just say it tanked down, so not good. In the past month, we're down, what, 8%? In the past 3 months, we're down about 10%. In the past year, the stock's up about 11%. In the past 5 years, up about 112%. So we were doing good, but we have 6 shares at an average cost of $210. Our equity value is $1,167, and our total return on this position is negative $95, which is about negative 7.5%. This stock was at around $220 at one point, and I was up about $60 in the position, but that's okay. You know, things happen. Earnings, you know, were out last week, and expected was $2.21. The actual was $2.11. So, you know, we can't always beat them. Next up, we have Waste Management, another stock that did bad this week. It also had earnings. In the past week, we're down 5%. Past month, we're down 3.5%. On the past 3 months, we're down about 6%. In the past year, we're up about 32%. And then on the 5-year chart, we're up about 132%. We own 5 shares of Waste Management, average cost of $112. Equity value is $556, and then our total return is $3 or negative $3.25. Earnings, once again, expected EPS was 114, actual was 119, so we beat earnings. But I'll show you once again, you know, what happened with that and why it went down. And then last but not least, before we end the portfolio, we still have that Disney call. This is a January 17th, 2020, $180 call. Crazy thing is, you know, at one point this was actually up, like where we were at. It was $157. Our buy price was about $128. So we were actually up on this position, and now we're negative $125 on that position. So the only thing that could change this is hopefully earnings are good in November, and hopefully Disney Plus hype, if it's not already priced in. We will see. But yeah, it's not looking good for me. Now let's take a look at the portfolio. On Friday, this boosted us back up. We're $18 during, you know, normal hours. After hours, we're up about $57 thanks to Microsoft. And on the week, 1 week, we're down $30. In the 1 month, we're down $34. 3 months, we're down $606. And in the 1 year, we're up $66.47, which is only 1%. So this portfolio was created March 6th. But I don't believe all the money was on there at once. So March 6th, so April, May, June, July, August, September, October. This portfolio is about 7 months old, and we had our ups, we had our downs, and then we had a huge gain on the Disney and Microsoft. We were up about $700 on this position, you know, in this portfolio. We were up about 10%, and then the portfolio just went down. But I do want to add that I did trade some options and lost like probably $300 worth in options. That's why it doesn't look like I made much, but I did make some money on like Enphase Energy and stuff like that. But right here you can see I'm down on that one, up on Microsoft, and then everything else is down except AMD and Microsoft right there. So yeah, let's take a look at the earnings and see what happened this week. Okay, so here's how the company did. This is for Microsoft. Earnings, like we said, it was $1.38 per share. Expected was $1.25. Revenue was $33.06 billion versus $32.23 billion. So we beat on revenue right there as well. Revenue increased 14%, which is great if you think about it. Now the only thing is the cloud business for Microsoft, it was down. The delivery was 59% revenue growth, which is down from the 64% growth on 1 quarter earlier, so last quarter. And this is really like the big thing that happened. This is why Microsoft didn't really move after earnings. It kind of went up a little bit and then it went back down to where started the day off. So people were kind of iffy on the cloud business, I guess. They were saying, oh, it's the growth is slowing down, so the stock didn't get a nice pop. But if the cloud growth was actually like a little bit higher, the stock probably would have had a little run up, but instead it was just kind of flat during the day. So Microsoft earnings, not bad. I enjoyed it. At least we weren't down. So yeah. So the real part why on Friday Microsoft had a nice little boost, about 3% gain after hours, is because Microsoft won the Pentagon's 10 billion Jedi cloud contract, beating Amazon. Amazon was actually, honestly, like the favorite. People were expected Amazon to win, but that didn't happen, you know. Like as you can see right there, with its stunning win of a lucrative 10 billion Pentagon deal contract on Friday, Microsoft not only beat Amazon, but also uprooted its large rival as the federal government's go-to cloud computing vendor. That is amazing for Microsoft. Their cloud computing powerhouse Azure, which secured another multi-billion-dollar government contract in August, was awarded the Joint Enterprise Defense Infrastructure, or JEDI, contract Friday afternoon. And as you can see, Amazon was the favorite. Oracle Corp and International Business Machine Corp, IBM, they were eliminated earlier on, but you know, Amazon was, you know, the favorite to win, but that did not happen. So you know, right now Amazon went down on Friday, but I'm sure it's not due to that. But they were the favorite to land a 10-year deal due to, in part to its $600 million cloud contract with the CIA and its expertise in streamlined data transfer, automated compliance system, and data sharing platforms. More than 5,000 government agencies use AWS. So, you know, everybody was very surprised that Amazon did not win and that Microsoft did. The Jedi Award sent Microsoft shares up about 3% in after hours, you know, and that was like late after hours. So everybody is super excited to see what's going to happen this week with Microsoft, if the stock's going to keep having a nice little rally up. So yeah, Amazon not doing good, Microsoft is booming. Let's take a look at McDonald's now. Okay, so McDonald's, for the first time in 2 years, McDonald's quarterly earnings fell short of the estimates, which is, you know, not good for the company. So here's how they did. Earnings per share were $2.11 versus $2.21 as expected. Revenue, they did not match the revenue or beat it. It was 5.4 billion versus 5.5 billion expected. And then global same-store sales, actually we beat on, so it was 5.9% versus the 5.6% that was expected. The reason people are thinking that all of this, you know, the earnings were not good is because you know, right there they said the 2 for $5 mix and match promotion. You know, they had that before, and then, you know, now we unveiled buy one get one for $1 and things like that. And you know, the price just didn't work out for the company. You know, it didn't have really good promotions that are still staying there. So the stock did not do good on earnings. And then we're gonna talk about Waste Management. Waste Management, it reported, it says mixed third quarter 2019 results, wherein the earnings surpassed the Zacks consensus estimates, but revenues lagged the same. So, you know, like we said, adjusted earnings per share of $1.19. They beat the consensus by 3 cents and were higher than a year ago quarter by 4 cents. So total revenue was $3.96 billion, which missed the consensus estimates by 31 million, but increased 3.8% year over year. You know, not much to say about this stock. You know, it still beat earnings, so this one will be back up. I'm not going to worry about it. Same with McDonald's. I know in the long run, McDonald's is going to continue to go up because everybody's going to eat McDonald's always. So yeah, guys, those are the earnings for the stocks in the portfolio so far. You know, mixed feelings. Some were good, some were bad, but nothing major. Let's hope that Disney has some banging earnings, and also AMD. Let's see what happens in the portfolio. The portfolio is now looking good. We were up, you know, $700, and now we're back to only up about $67. But yeah, if you guys like this video, go ahead and smash that like button. Make sure you subscribe to the channel for more content like this. Leave a comment below. What do you guys think about all this earnings or stocks in your portfolio? How have earnings been for you? And also, you know, your predictions for, let's say, Disney. How do you think Disney's going to do in Disney Plus? So will the stock continue to trend down, or is it going to climb back up? All right, guys, I'll see you in the next video.